What's the real Chinese demand for corn and soybeans, and what will be the changes in production? Terry Reilly is back here to respond these questions and more right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. So, Terry, how are you doing today? We have had like a very important week in terms of announcements, but I guess we don't have any clarity when it comes to the Chinese real demand for U.S. corn and soybeans. They had bought a lot in previous months, but I guess we are not sure that they will continue to do so.
Yeah, you're absolutely right. So there isn't total clarity. You need both parties to pretty much agree on a number. When it comes to the grains, in my opinion, China doesn't really need to buy that much corn and wheat. They have quotas anyway, so they can buy up to those quotas, but they have other countries to buy from. You look at Argentine crops, for example, corn is on a physical basis still cheaper than the US. And with them dropping the export taxes, it would make sense for any private importer from China to, if they needed corn, to maybe shop around for Argentine corn. So there's, in terms of dollars, it really all depends when China comes in. If China does come in for the U.S. beans, it will likely be for October on. But they're trimming their hog production right now, trying to raise prices. They have a very large grain reserve. They're selling soybeans out of reserves right now, which have been, well, at least the last auction was fairly large. So if China needs grains and oil seeds, they're probably not going to come in until a little bit later this year. As far as the geopolitical announcements, obviously that rock markets a little bit, and we're seeing prices, even though they could be a little bit firmer today. We have a 3-day holiday weekend, and basically some of these traders are on the sidelines, and they're also getting out of their long positions as well because the fund positions have been staggering, in my opinion, when it comes to a lot of these longs coming into the market.
Yes, and we also have the supply aspect of all of these. We have long been seeing over the last several weeks dryness over the U.S.
Mhm.
plains, affecting mostly wheat, but also now we are seeing more and more lower than expected yields for corn in parts of the Midwest.
Yeah, you're correct. From if you were to draw a line from, like, let's say Kansas City all the way up into the Northeast Ohio, it is abnormally a little bit dry. Even though we had record rains last month, this month we're running a little bit behind normal. But I think going forward, it's really going to come down to subsoil moisture, and I think that's ample. So I look for corn conditions to actually improve. And also with the fantastic weather for plantings, producers traditionally plan a little bit more than intentions. So coming up in the June report for acreage, I look for combined corn and beans acres to actually increase. But I still look for about a 2 million swing in the commodities.
Yeah, so are you expecting what price levels for corn now? And are you suggesting more people to hedge at this time or wait a little?
If I were a producer, I'd be adding more sales. And my conviction is both the prices of corn and beans to grind lower, given that the weather outlook over the next several months, the long-term outlook for the U.S. looks fantastic. Plus you got record crops coming online out of South America. So I think the U.S. Exporters are gonna see very heavy competition against South America. And but that's for corn and beans. For wheat, I look for prices to probably remain a little bit steady and trade two-sided. And they're already wheat prices are already pretty much inflated, and that's because there are problems out there. The abandonment is the largest I've seen it in a long time. And we're not out of the woods with the drought monitor, and also the even the short-term precipitation outlook for the Great Plains.
Yeah, so you are not completely bullish at this time.
Correct.
Is there anything else that would you like to add for our viewers?
You know, as far as the yield outlook goes, um, I would say, in my prediction, this is very early stage, maybe a at trend or just below trend yields to be expected, but that should keep the stocks fairly inflated. I think that corn for ethanol for the current year is maybe a little bit overstated. That might raise ending stocks in upcoming forecasts. I think that 310 million bushels that USDA is predicting for next year is probably the tightest we're going to see going forward in the forecast. So larger stocks are seen in that point. Wheat, as I mentioned, is a little bit, we're having some problems out there, but we'll have ample stocks because the US will be the last stop for any major importers to probably shop from.
Thank you very much.
Welcome.
If you made it this far, this is for you. If you want deeper insights into how agriculture, geopolitics, and global markets actually connect, subscribe to the Geopolitics Report on Substack. That's where I go beyond the headlines, breaking down the strategies, risks, and shifts shaping the global food system. Subscribe and stay ahead. Thank